Hello and welcome to the Baby Giants Investing Podcast. Join us as we chat about the weird and wild world of small cap investing, all while searching for the precious few fast-growing businesses that have a shot at becoming industry giants. This podcast is for entertainment purposes only and is strictly not intended as financial advice. Any opinions are general in nature and do not take into account your personal circumstances, needs, or objectives. Securities mentioned are for illustration purposes only, and this podcast should not influence investment decisions. You should read the relevant PDS and consider speaking to a financial advisor before making investment decisions. Past performance is no indicator of future returns. Podcast guests and their clients may hold positions in the securities discussed in this podcast. All right, we're live. We're back in 2024 after a extended break. We're back, but Claude is not back. Claude
MIA.
Claude's MIA, but Andrew and I will carry the load.
We will. Happy New Year to you, Matt, and Happy New Year to all our listeners.
Yeah, Happy New Year, man. Well, I'll kick off with some good news as usual, and maybe we can get into a bit of thinking about 2024. I had three things today, which I'll just go through quickly. Kiwi birds are being born in New Zealand's capital for the first time in over a century.
Wow.
There used to be, apparently before humans arrived, 12 million Kiwi birds in New Zealand. They plummeted to 60,000, and a lot were basically none in Wellington. They've kind of done this.
Cats?
Yeah, a lot of it's cats, rats. Introduced pets, but cats is a big one. There was actually a politician in New Zealand who wanted to get rid of cats, and just everyone hated him.
He's not wrong.
The founder of Trade Me's father, actually. Yeah.
Okay.
But yeah, he's not. Yeah, they kill a lot of birds. But no, they've put this elaborate bird protection system around where they're basically killing every rat in Wellington or in large areas of these habitats, and actually just trying to literally return it to the way it was. Which is, I just think it's kind of impressive from people stewarding the environment and putting it back the way that we want it.
We can do a lot when we pull our finger. There's a lot to be said when we all sort of constructively move in
it's just chipping away at a problem everyone would say is too hard, right? I just think it's kind of cool.
Yeah.
All right, what else we got? There was another one. CRISPR. Okay, so this new company is using CRISPR to edit viruses out of pig organs, but they created this, basically a pig organ that can be used to treat the blood. It's kind of like how you would normally have someone on dialysis. The blood comes out of a person into a dialysis machine and then is placed back in. They've created that with a genetically engineered pig organ that is kept alive in an incubator, just the organ.
Wow.
And it's just been trialed. It's kind of like dialysis. This is a quote. Kind of like dialysis, except the guts of the machine are literal guts from a pig. It's not a xenotransplant, but it's a technology and a product that can fill an unmet need. So basically you have this genetically engineered pig organ outside the body. Blood is pumped into it and then pumped back out. I think it's incredible. Obviously it gives you can give you weird Frankenstein vibes. Claude's not here, so I'll do the negative side of it. But just amazing what's happening with that, CRISPR gene editing, what we will be able to do for longevity and stuff. I think it's pretty cool.
That is very cool. Can I give you one that's good? I think it's good.
Yeah.
Have you heard of Figure, the robot company?
I'm not sure I have.
Check it out. At Figure_robot is the Twitter handle. That'll launch you off to their site, which is just figure.ai and the rest of it. They're doing humanoid robots.
Yeah.
And it's kind of like, think of iRobot kind of thing. They're Optimus and Tesla and Boston Dynamics are getting a lot of the attention, but it looks as though these guys have made some really significant breakthroughs. And the difference is not so much in the actuators and the mechanics around it, although there's a lot of IP around that, but it's just the way that it is training. It's an AI sort of overlap there. So anyway, they signed a commercial agreement with BMW recently to deploy their general purpose robots in the automotive manufacturing environment. So it's we've had robots in automotive manufacturing for a while, but they're very specific. They do one thing very fast, very well. And that's, programmed within an inch of its life. These are more like general purpose kind of robots. I've gone blank now. There's a podcast with the founder there is talking about the where they are on their timeline towards commercialization. Now, take it with a grain of salt. He's going to sort of talk his own book, but you're basically, in his view, is like, this decade before 2030, we'll have commercially available robots. What you might pay for a small family size car, you can have a general purpose robot at your house that will do anything that you can, and the way that you teach it is you just show it. It's like, hey, here's how I make my coffee. Yeah. And they're all networked, of course, as well. So once one robot somewhere figures it out, they all know how to do it.
Mm-hmm. To make sure they all uprise at the same time.
So again, very iRobot kind of vibes. But it's sort of
I actually realized now, as you said it, I had seen this and I just saw it in passing in media, and I thought it was, I just assumed it was Tesla's robot. Like I literally saw, look at the leaps this company's gone to, and it just
Optimus. I mean, what did Elon put something out with, like it folded a shirt or something?
Yeah.
But again, but the kind of cool thing there is that it's a delicate kind of job, and again, it was more about how it was learned to do that rather than someone specifically programming it, like lift this, do that.
Yeah.
It's kind of cool. It is something that I feel will get more and more attention. It goes on. It does make you wonder, like combined with general AI, like I feel as though I need to train to be a hairdresser or a plumber or something, because, and even a plumbing, or even those jobs with robots, is like, I don't know what I'm actually going to do here.
There's this
fascinating.
Kind of like, I don't know, kind of like a media brand I follow in the US called Everywhere. Anyway, one of the writers there has been following AI very closely, and how, when all these tools are coming out to replace writing, because they're basically like a bunch of writers, he was talking about, like, he was genuinely having this concern. Like he was actually like, what am I going to do with my life kind of thing. And his answer was to buy Chick-fil-A, like the franchise Chick-fil-A, which, by the way, I think I've talked about. I'm a very big fan of. It's like, it's the craziest thing. It's like a fancy KFC with like everyone who cares about their job, and everything's really nice and the food's good. But yeah, that was his plan, because he's like, people will always need chicken sandwiches. Like very far down in the future when we're not eating this stuff. Yeah, it's wild, man, to think about. Actually, it's good to see. We won't segue now, but like Fastbrick is a company we can talk about. It's just raised capital, and it's been on the ASX boards for a long time. Interesting to think about. I don't know that. I guess the challenge is like just the capital cost of the robot. How cheap? How many people actually need to have one of these things?
Well, that's the thing. I mean, Elon's talked a lot about this as well. I mean, it's the same. There's a scale issue there, but Teslas are going down the cost curve pretty fast. So I imagine that it is something that is very much only in the domain of the uber wealthy, but it goes down. It's like you can buy the most basic family car and it's got seat warmers and electric windows and LED displays. Like it starts in the elite and then it moves down as it becomes commodified. So I guess to my mind, it's sort of like, I made the point before, there is sort of what might theoretically be possible and what's been technically demonstrated. And once you sort of pass that point, then the argument really is just around one of time frame.
Yeah.
And it's like, is it going to happen? Yes. Will it happen? Yeah, absolutely. When? Well, we can have a discussion about that, but it's kind of like, it's just a matter of time.
I think, I kind of have a hunch that it happens in the enterprise first, though. And maybe, I guess it already is. There's literally restaurants in Asia where there's a machine flipping the burgers and there's robot waiters. So maybe that is actually what happens. But yeah, I guess it's easier to imagine because they are more repetitive tasks, and like the failure thing can be, there's someone more managing it, like in getting it all working. Whereas I think at home, they're just such a variation of tasks that would probably be that'd probably be one of the harder things to do, right? Like if it's
I'm not, I didn't explain it right, but I think that's what's cool about these. They are general purpose in the sense that, that they can be trained to do anything by watching you do it, and there'll be a learning process. It's not like, oh, I got it. I've seen it once and now I will do it perfectly. But But that is
probably won't have them feeding our newborn baby for a while.
Maybe not. Maybe hold back on that.
Yeah. Maybe mow the lawns to start with.
But I could see it as a family decision, and I'm talking about, just your average middle class family. It's like, is it worthwhile us spending 40 grand in today's dollars?
Yeah.
For a general purpose robot? And you think, well, that's a bit of an extravagance. And then you think, well, actually, it does the laundry, it cleans the house, it cooks, mows the lawn, It feeds the baby. It does the dishes. You know, I can see the economic rationale.
Yeah.
And I'm assuming that it actually, maybe I'm getting too far ahead of but it works as well as all of that kind of stuff. And it's just got a dock that it charges, like your Roomba, right? Like it just backs itself in and charges up at night. Yeah. But it's just like, make me a cheese toasty, you know, like wash up. That is really interesting. All these other robots are very specific.
Master, what is my purpose? You make cheese toasties. What?
Welcome to the party, bro.
Why?
Welcome to the existential dread that we all deal with.
It's a Rick and Morty reference for anyone.
Nice.
Cool, man. All right, I've got one other. I'll drop another. There's a random bit of good news I read. It's coming out of the South China Morning Post, so it could be pretty made up. I don't know. But basically, scientists turning coal to protein for livestock at 1,000th as much land as farming. So at the moment, we have huge amounts of the Earth's surface that we farm just so that we can grow crops that we then feed to livestock, basically pigs and other animals. And that's a really big deal in China because 80% of their protein is imported, mostly soybeans, a lot from the United States. And so this alternative is basically taking coal, converting it to methanol, which apparently has near zero carbon emissions in that transfer, and then using that methanol to feed a special strain of yeast, which ferments the methanol to produce a single-cell protein, complete with a range of amino acids, vitamins, inorganic salts, fats, and carbohydrates. The resulting organism is much richer in protein than plants are, and it can be used to partially replace fish, soybeans, meat, and skim milk from a range of animal feeds. Yeah, I mean, kind of cool, I guess, if it's, you know, there's no side effects from this. But yeah, it's just kind of wild. Advanced
coal. Protein from coal.
Yeah, exactly.
Well, indirectly, I suppose.
Coal to gas to feed the yeast, and then the yeast produces a protein.
That is wild. Hey, can I give you a factoid that I only learned? It was like, how old were you when you learned this? Because I was way older than I feel as though I should have been. But all the coal on the planet was only made in a very specific period of geological time, and stopped being made after that. The reason being is that it took a while for bacteria and fungi to learn how to break down lignin. Is it lignin? No, but one of the components in plant material. So for 100 million years or so, all the plants on the surface of the Earth couldn't break down.
They were just piling up.
They're just piling up. God. That's the coal and the.
It's like my backyard.
Yeah, exactly.
My backyard over summer.
I'm doing my part, but now it doesn't happen. So we will never, humans could go extinct tomorrow. We could wind the clock forward 1 billion years. Like we'll never have. Wow,
so they just built up for like this immense period of time, and then they evolved, and then like boom, and then they made.
And then
made what became
may have been fungi or bacteria. Anyway, micro organisms figured out how to break this down. Not to do a service to the planet, but because it helped them survive.
They were just hungry.
But just before it couldn't break. It couldn't break down. It just couldn't break down. So it just like got compacted and that's where we have. So all of the coal in existence came from a very in geological timeframes, relatively short period in the Earth's history. So there you go.
Well, to get meta, I the more I dug into, fossil fuels, the more I think we wouldn't have had any of the revolution without coal.
Oh no, absolutely
not. It feels like, I wonder what happened in like the 1800s that suddenly we exploded. It's like all this abundant energy, I think, was like a major contributor. That's overlooked.
It's actually a very deep point. I mean, energy is the base of all civilization, whether you were burning wood or coal or solar or nuclear or whatever. We should hope, I think, as a species, to be consuming vastly greater amounts of energy.
100%. Yeah.
That's not, and that you got to be careful when you say that, because people think that you mean that you're advocating for lots more methane and carbon in the atmosphere or whatever. No, I'm just meaning in terms of energy production and consumption, we really should want to have a lot more of it. And fortunately, there's a lot of it around if we're smart enough to sort of use it in the right way. That's a whole nother.
No. Yeah. I'm just like avoiding talking about nuclear energy or something. All right, let's transition to Fastbrick actually, because we did just touch on the robots. So Fastbrick's been around. It feels like forever. I remember looking at this in 2014. And it's basically a bricklaying robot. So the Hadrian X is this big machine that lays bricks. And the idea is that it does it much faster, much cheaper than a bricklayer. And it has been saying that for a very long time, though. So I guess I've had like a fair bit of skepticism about it. It has just recently raised capital and has just done that over the last few weeks. Yep, again.
The share count has doubled in like 3 years.
Yeah. And
maybe 4 years.
Yeah. When I first looked at it back in 2014, I had people getting quite excited about it. I think it was 2014. But at that time, it was like they had this options or share issuance policy where they would issue like a lot of shares for hitting goals that I thought were not going to deliver that good outcome. So it was like, if we build 10 houses or something using this, then we'll issue a bunch of shares. And it's just, I guess it's been stuck in this, like, it's just a very hard thing to do. The moment you start trying to do something in reality, it's actually very difficult to pull this off. And maybe
theoretically straightforward.
Yeah.
But practically,
it was just bumping up against reality, right? Like that's why, software businesses, I think, caught a lot of people by surprise. I think it's pretty well known now, but just how they avoid a lot of the kind of pitfalls of reality. You look at what stops a lot of growth companies. If you're like a manufacturing business, you have to go and every time you grow a bit more, you have to go and build out a new plant somewhere, and like all the problems that can come with manufacturing in reality. And then this is basically facing the same problem. So robots have to deal with all the weirdness of the world. So, maybe they've got the process perfect and then they go to a place where it rains more than it used to and all the bricks get soaked or something. I'm just making this up, but or there's humidity or the ground's different or whatever else. Like all these things, thousands of things, plus any variation you have in your machine can cause all these problems. So anyway, Fastbrick's raising some more cash. It's made a lot of losses. Hasn't had too much to show for it so far. I guess it's one I always keep an eye on. I don't know if you had any other thoughts on it, Andrew. It's just caught my eye that it's still going and still raising, and it's signing some new potential partnerships. So it's executed a binding suite of agreements with CRH Ventures Americas, the venture capital unit of for 10-house demonstration program in Florida. I guess that's kind of to date completed or contracted 32 structures.
So they're actually being used, which is kind of cool. I know Brickworks is a major investor. I forget the percentage that they hold, but the team at Brickworks are no slouches. So I think I think the initial reaction to any quote unquote serious investor is to laugh because from a heuristic standpoint, there's red flags everywhere. A serial capital raiser. Always gunner, always on the cusp of, huge presentations full of the addressable market potential and et cetera, but it's like, when revenue, when money, actually there's a bit of revenue, but when profit, and there are lots of companies on the ASX that are serial raisers. And like when you see companies within this template, it's a pretty good heuristic, as I say, to sort of go, well, this is where capital goes to die. So that's your initial reaction. Although there has to be something there that not necessarily, the fact that you are able to raise capital says something, I guess, because people don't have to invest in it and they're able to sort of sell a story here. And the potential is huge, right? Like it's to have a machine that can do this faster, better, more cost effectively than brickies. I get it. I really do get it. And I think a lot of these things are ridiculous until they're not. So I want to sort of snigger and laugh, but at the same time, I'm wary that there is potential here. And when the fact that it is actually being used in construction right now is something that is noteworthy. So look, it's for me personally, it's still early stage. It's still too speculative. I have no way of handicapping it I haven't done the deep dive, and I'm probably not inclined to it at this point. So I'm probably more butt covering than anything else at this point because it's a podcast that'll be on the internet forever. But there is a part of me that feels as though it deserves to be taken seriously. Or is that wrong? What do you think?
No, I think it's the technology's exists. I think the questions are: is it going to be able to deliver at scale? Cheaper. It talks in the presentation about, I think it's, let me just find the numbers, 24 times faster, and the average life cycle cost of laying in commercial terms, maybe like a fourth the cost of a manual bricklayer. That's what they're kind of saying.
Big saving.
Yeah, so those are big savings, and speed matters a lot, particularly when there's there's a shortage of brickies basically in the US, and I think in generally there's a shortage of tradies. So
I was talking to you before off air about the latest South Park series where everyone forgets how to do like we're all like in marketing and PR, and like no one actually knows how to make and do stuff anymore.
Yeah, pretty much, man.
There's the truth to it. There's truth to it.
The boomers were the last generation. Not completely true, obviously there are, but like there was just that massive shift towards university and white collar stuff, and I think there's a massive shortage of people who actually do things.
We're all like influencers and real estate agents, and like these useless people out there. Sorry, not sorry to all the real estate agents.
Managed to get real estate agents into it. There's a shortage of workers. I get that demand. I guess the challenge is just how it's just really hard to compete with people. And like you see this with a lot of things. I actually just read another article the other day about the self-checkout machines.
Yes.
And those are actually being stripped out in a lot of places in the US. I don't think I still see them here quite a bit. Like I guess Woolies and Coles still have them, but they still have the other checkouts as well. I guess in the US, maybe they've just got such a problem with like shoplifting in a lot of areas. I don't know if it's as bad.
And that there's very different minimum wage sort of rules and stuff there. So it's like
That's true. That's probably
one of a better term. Exploit a human being is maybe better than a.
Well, that's the challenge in the US as well, right? Like if you have that, for Hadrian, for building for brickies, basically, if you're competing with, some cheaper labor, that's another challenge. But so I guess that's one of my other thoughts on it. But I get overall though, if I was going to invest, I just want to see more steady revenue from production rather than the potential. I think it does seem to have survived through a difficult road, and I guess I just want to see it actually deliver more houses, more revenue from that.
I think so. I mean, it's one that I would be happy to keep on a watch list. Actually, now that I'm just thinking out loud, I might reach out and see if we can have a chat.
Have a chat on Strawman.
Because there might be. I mean, again, I'm really, and if anyone from the company is listening, please note that we're not here just to sort of giggle and laugh. I do think that there is potential with the business, and I'd love to sort of have that laid out. There was one slide in the raising deck that I thought was really interesting, where they talked about the number of machines in operation versus their utilization and what revenue potential that has. So even if you have one machine being used 60% of the time, that's $3.2 million in revenue. And then that the way the math sort of works is sort of you get to 10 machines maybe being used 70% of the time, you're now at 37 million US in revenue. So there's an ROI calculus there on the capital investment of each of these machines that if you can, like so often is the case, right? If you get the utilization at a certain rate, the economics can start to look pretty interesting and attractive. And I suspect too, without I'm just shooting from the hip here, but we've seen this with a few Aussie technology companies where the better outcome for shareholders may be not so much in Fastbrick themselves building all of these things and then leasing them out or selling them, but rather just finding a partner that you can license the IP to. Yeah. Much more capital light, right? So I think that I'm really open to hearing the pitch. So
I think that's an important one. If you could prove out the business model, get them actually out there, and then license the IP when you're in a position of strength. I think like to Caterpillar or something, right? Because then they're the experts at actually building these things at scale. And I guess that was the other kind of, if I was thinking long term, just the risk that like a Chinese company imitates this business because they have, you'd want to make sure that I guess the algorithm, the smarts of the AI of placing it would probably be an important kind of barrier to that, hopefully.
Yeah. Cool. And it's another one of the, I know it's a regular theme on this podcast and when we talk privately as well, it's just that it's why this AI thing is such a big deal is the broad applicability, the generalized use case of it. So a lot of money has been invested in the IP in terms of the parts, the componentry, how it all sort of works together, and no doubt too the software. But when you can have sort of something that's sort of capable of like independent learning, that the Venn diagram overlap there, it becomes very interesting. Well, things can move very rapidly.
Actually, what you mentioned earlier with the robot, was it Figure company? Yeah. I mean, that is actually a threat to something like Fastbrick as well, right? Because if you get these robots becoming really good, they become cheap enough. You've got for 400,000, you've got 10 of these things. That's 10 brickies working around the clock.
Excellent point.
No need for lunch breaks or rest or whatever else. Yeah. No unions.
Yeah.
So yeah, I think that some of that stuff could be a factor as well. Like you it's a fascinating area, man. You're just constantly running up against other people trying to out innovate, which is what drives the world forward.
Yeah.
Speaking of AI, Appen has been smashed again. Just checked in on this one recently. It's down, I believe, 99% from its highs.
Yeah.
Which is pretty wild. And like, I remember looking at it when it was at those highs, and it was very hard to justify at one point. It got up to like $35 a share. And you had to assume then that it would keep growing at, say, 35% a year. But you could kind of assume that. Like, I remember talking to someone like, oh man, this is really stretched. Like, you have to assume it keeps growing at this rate several years. And they're just like, yeah, you do. But, it has been. Yeah. And AI is growing. So it's easy to say that it was really stupid. And it was stretched. I think you could easily tell it was stretched, but it wasn't like insane. Like, you could make a case for it then, but it's now down 99% from that point. Pretty wild. The big news this week was that Google is not going to be renewing their service agreement, which is a very big deal because they make up, I think it's like 80 million of revenue, which is 30%. 30% of their revenue there.
And based on the margin, I tried to do a back of the envelope thing here on their most recent. I think it comes close to about a quarter of their gross profit as well. And this is a company that's already losing money at the EBITDA.
Yeah, they claim that they would have been, I think they said in the announcement, break even in November, December. Yeah, okay. Which enabled achievement of cash EBITDA. Don't know what cash EBITDA is. Cash EBITDA break even objective. So I guess they're saying that if it wasn't like they just got to break even in December and now they're getting this news. But yeah, they have been making a lot of losses over the last few years.
A lesson in counterparty risk and customer concentration. You've also got
a big part.
It is. And I think that was some of the risks highlighted a while ago, actually, by a lot of people. Yeah. And it's also got to wonder too, well, if Google doesn't need you anymore, does Meta need you anymore? Or, I don't think they ever explicitly spell out who a lot of these customers are, but I think you take it as read that a lot of them are some pretty big Silicon Valley firms. And I think there will always be a need for this type of service, but there's a question of, well, at what size and what scale. So that's, I'm certainly not going to say, this is definitely going to zero, but I have no ability to handicap the odds on this thing. So I'm staying a mile away from it.
I would say it's just really hard. So I kind of see it as like a black box that served black box customers.
Yes.
Because like its services were quite a black box to know what was going on inside. It was literally like companies doing research. They don't want to tell you. And the companies themselves, like Facebook or Meta and Google, etc., were quite like that. Those domains, you couldn't just find out what they were doing, right? There was like quite a black box what they were doing. And I think it was actually just like Appen got a lot of criticism, its prior CEO, for the repeatedly downgrading. So like downgrading, saying it's going to be bad, and then it's like, actually it's going to be worse, actually it's going to be worse, actually it's going to be worse, which often in companies means that companies lack candor or aren't willing to like be upfront about how bad things are, etc. But I think in Appen's case, it was just really difficult to predict, and even for the CEO and management team company, because you look on the upside, part of the reason it rallied so hard was because it just continuously upgraded. Every time it would be like, okay, we're going to do this. Actually, it's going to be even better. Actually, it's going to be even better. Actually, it's going to be even better, which just to me means they probably just didn't have visibility. Like they just didn't know what the future would bring. They had like some immediate thing, but they didn't really have a sense of what was happening next. And that meant on the way up, they were like this upgrade story that lasted for like many years. And on the way down, it meant very bad. But I think what it reflects is just they were in a business where it was a very difficult to predict business and wasn't at their control.
Yeah. Yep. I, it, it's easy, I think, and you've seen a bit of this where people go, ha ha, it was so obvious, what idiots would have been doing all of this. But the lesson that you have from other um, companies that go on to deliver incredible returns for shareholders is that they're always expensive. Like, Claude's not here, so I'll mention it. Prometheus, right? So, I mean, I think it's pretty insanely priced, but then that's been a thought that has cost me a lot of money. So for every example you can find, there's a sort of like, yeah, this is price perfection. It was stupid and it was so far above any kind of traditional historical metrics. It's like, yeah, but that's usually the case for companies that go on that are able to deliver very high rates of growth. And you can overthink those kinds of ones. If you're the kind of investor, like I think you and I and many of our listeners are, who sort of try to look for those big sort of multi-bagger potentials over your career, because let's face it, you only need a few of them to really move the dial. If you're going to sell out because the PE is above 30 every time, you're just never ever going to get any of those. So I can. And then you look at it at a point in time where it's just like, yes, to your point, it was growing incredibly rapidly with upgrade after upgrade after upgrade in a field that was exploding. Like I could, it wasn't for me at the time, but I could empathize with those that had that view. The error might have been though in being inflexible in that view. So I don't think it was an unreasonable view at a point in time, but then I'm always reminded of these situations. It's the stock that loses 90% is the one that was down 80% and then halves, right? And this is a classic example of.
So this is a stock that was down 80% and then halved and then fell 90%.
Yes.
Because it went from 80 to 90 to 99% down. So it's just
a lesson.
That journey. Like you had it fall 80% on you, then it fell in half, and then it fell 90% again.
A lesson in anchoring, right? It's like, well, I know it's got. Look, I'm the king of this. I know it's got a lot of hairs on it, but hey, it's down 90% from the high, so it's in the price. It's such an easy sort of argument to kind of make, but it's like it can always drop 100% from any level. Is the thing to bear in mind there. So I think that's what I'm trying to sort of emphasize here is for not just those that may have been in this situation, but who will find themselves in similar situations in the future. It's that idea of having that thesis well articulated in your own mind and having the
know when it breaks.
And if it's broken, or even if it's not necessarily broken, but if I feel as though when you get to a stage where it's just like, it's not that you're definitely hyper confident that this is not going to work out, but as soon as it goes to the I don't know phase, that's as good as broken for my mind.
I think also just one other thing to keep in mind is if you were honestly looking at this business and you don't just, because it's very tempting when stocks go up to think they're good because they've gone up, or like the quality is related to the share price, but the quality and the share price are two independent characteristics, right? And this was a business, it was always going to be risky. So Xero, for instance, is a business that started out risky when it was burning money and became less risky. And now it is not a very risky, but like the fundamentals of the business, not the share price, the actual quality of the business is not a risky business, right? It's a very sticky, subscription software. You could say whether it's growing enough, blah, blah, blah. But the actual business itself isn't a risky business. But Appen was always a risky business because it had a lot of customer concentration for a few customers that could just change their mind on a whim. And we've just seen that happen now with Google, but that could always happen in a changing field. So it was kind of the business where, unlike some businesses, monsters, as I like to call them, they become less risky over time. Some stay risky the whole way. And I think that, A2 Milk to a degree is like that. And we've kind of seen that come off as well. Business, it depends on the type of business. Some become less risky, some don't. And I think that's one to keep in mind. And then just position sizing, I guess, you should still be doing the valuation work so that you can go, actually, this really is stretched. Maybe you still own it, but you maybe don't own it and just like close your eyes and, and own it at the same massive position that it's grown to, right? Maybe you just trim it down to a small size, etc.
Well, and just to go against my earlier point is that the ones that are always expensive, and how you can sort of shoot yourself in the foot by being too clever with valuation. While that is certainly true, I think you do have to be hyper mindful of that asymmetry. I made similar points with Afterpay and Brainchip. and a bunch of them where the bulls would sort of say, yes, but look, this is what it's going to do. And you go, okay, well, I don't know if that's true or not, but let's just take that at face value and let's do some numbers. And then you work it all out and just go, okay, well, if everything you say is going to happen, and making some plausible, sensible kind of assumptions around things, I may get a 10% CAGR going forward over the next 10 years, which is not bad. Like, or maybe it's 15%. It's like, well, that's better than a poke in the eye. You wouldn't turn it down. At the same time, if anything falls short of those incredibly lofty expectations, you are looking at a 50, 60 or 70% sort of drawdown. So it's sort of like heads, I win a little bit, tails, I lose a lot. And it's not everything is an Amazon, not everything is a Pro Medicus. So it's sort of,
most aren't. I think that's it. That's still doing the valuation work. That's exactly
yes.
it. And it's like still, and that's holding your feet to the fire, keeping you grounded when your head goes into the clouds and stuff. So no, I like it too. I think a lot of people, I know I have struggled with this in the past too. You sort of say, you stress the importance of valuation work and the rest of it. And it feels as though I need to settle on a number. And I guess ultimately you do for your actual, trade decisions. But I think there's also incredible value in just doing a whole bunch of what if scenarios. At least knowing this is sort of like, well, it's like the reverse DCF kind of idea. It's sort of like, I don't know for sure. And let's be realistic. No one can ever predict the future. But I know what the valuation should be based on, scenario A and scenario B and scenario C. And you can come up with a spread. And again, you won't be able to know for sure and with confidence as to which path, history will eventually unfold. But, if you're in a scenario where it's a minority of situations that work out well for you, again, statistically speaking, the odds aren't that good. You either need to have incredibly high conviction that it will actually go along that path. Otherwise, it's very difficult. And just for my sins, I'll put it out here because why not? I want to say, Claude's not here. Apologies, mate. I feel as though Pro Medicus is really getting to that stage where it's like I agree that it is easily one of the best companies on the ASX, but it's sort of like, gosh, things need to go well. Like, my goodness. And if they do, I might get a 15% CAGR. That's kind of where I'm at with that business. Although, watch it double from here. I think you made a really good point of the, people kind of, there's a certain group of investors who really hate on like DCFs and stuff. But I think that what they're missing, or what the value of it to me, is not like this is a model that knows everything. It's more like the process of it is you're actually building the model in your own brain. And so when you think through all those scenarios, you're turning over this thing you're trying to understand from all these different angles in your own mind, so that your own mind has kind of like a model for it. And so that ultimately is kind of expressed in whatever you do, whether it's done in a spreadsheet or however else you think about it. But it's that process of turning it over in your mind, examining it from all angles, thinking about different scenarios. That's where all the value add is. And that's what allows you to make better decisions, because you get more of a feel of what the business actually is. So what is the real value of this thing?
The bell curve meme? Where it's just like, all you need
the dimwit, the midwit, and the like smart person.
It's like this Jedi at the other end.
The Jedi, yeah.
And it's sort of like, I feel like that's the thing with valuation. Like so the down on the left there, you've got this just like, I just look at the PE, and then in the middle you go, no, I need to do a multi-variable DCF analysis. And then in the end, you've got just do the PE. And I think there's some truth to that. I think I would never discourage anyone from going down the more technical path of valuation, because what you learn from that is so valuable, right? And we know that things like PEs and that are incredibly flawed. But once you know why they're flawed and where they can be flawed, and how that, and how a PE actually relates to DCF analysis, you can actually have a huge amount of value from something like that. So simplicity is derived from an understanding of complexity. You don't just want to be simple for the sake of being simple, but if you can derive simplicity from a deep understanding of the complexity that is involved, I think that is hugely valuable. So
100%, man. There's a quote which you may know, I think, that I really like, which is, for the simplicity on this side of complexity, I wouldn't give you a fig, but for the simplicity on the other side of complexity, for that I would give you anything I have.
Where's that from? I love that.
It's Oliver Wendell Holmes. I'll send you this.
That's so good.
the simplicity on the other side of complexity. I think about that a lot because that's what you're trying to get to, and you just want to avoid the simplicity on this side, where it's just like they make everything too simple, and it's just like, yeah, it's going up. You want that simplicity on the other side of complexity.
Love that. Hey, I found the tweet. Okay, so this is from Clark Square Capital. One mistake I made early in my career was trying to be precise rather than trying to be accurate. Creating a multi-tab 300-line model in Excel feels good, but it won't make you a better forecaster. Identify the 2 to 3 things that matter and spend your time on those instead, which is a good point. But then someone else sort of quote tweeted it and said, an important caveat to this is that you should really spend at least a couple of years spinning your wheels and plumbing through the depths of a multi-tab 300-line model. Simplicity needs to be derived from experience with complexity.
Yeah, that's literally that. So that quote tweeter, that's kind of that's my experience of it. Like, I love to get to those 2 to 3 points, but that's why I do the other work. And it's not necessarily like a one multi-tab model or whatever, but it's just like all the work you do allows you to reach those 2 to 3 points, and have those be hopefully the correct points. Yeah.
But Buffett's often quoted as like, oh, he can just make a valuation out of his head because he's a genius, and people assume that he's like, well, I think that's a great example of this kind of stuff. He's got enough sort of mental models and experience and heuristics that he can sort of draw on, such that he's just like, give me a rough idea of the multiple. And based on what I know of this kind of business and that, then that's probably appropriate given relative to some notional generalized idea of how it's going to grow. So huge wisdom in all of that.
Let's talk about
not buying Appen.
Yeah, not buying Appen. Let's talk about. Well, I mean, Appen. To be honest, though, just quickly to tie it in a bow. I mean, it's down so much. It's got cash. It's at like net cash now because they just raised cash again recently. It's burning. It had been burning a lot. I would be. I think it'd be one to keep an eye on. If anyone is following this has a better idea of why they think why it has gone so badly, if it could turn around, like that might give you the seeds of a turnaround. I wouldn't say from this point down 99%, but with net cash backing, if they strip out the cost, blah blah blah, maybe they could do something else. Anyway, we'll move on. I thought it'd be interesting just to touch on lithium and EVs, because lithium is getting smashed, which we touched on. It was already happening before New Year's, but it's kind of interesting. We think of the story 2 years ago. The obvious thing was there's going to be a lot of electric vehicles, so therefore buy lithium because you need lithium. And there's just every time that this happens, there's this idea that there won't be any supply response, and so therefore prices are just going to go up. And then every time there's a supply response because prices are high, and we're just seeing them crash back down to earth. I think we touched on that a bit before. It's just continued to kind of come through now. But I guess the other thing, which you talked about, I think we talked about a little last year, but I'm just seeing more and more data points for it. It's just surprising to me, how EVs, electric vehicles, actually aren't kind of crossing to the mainstream nearly as much as people were expecting a couple of years ago. I don't know if you'd seen anything on this, Andrew. I can drop. Let me just find some. So Ford cut its production in half. I might have talked about that last year. Was
it Hertz or one of the big rental companies?
Yeah, Hertz. That was a big one. They're getting rid of a lot of their Teslas.
Yeah.
I just saw another point. So Americans bought a record 1.2 million electric vehicles last year, which was a gain of 46%. But it's only now at a 7.6% share of all new cars. And hybrid sales actually rose even faster, up 65%, and lifting their share to 8%. So basically, hybrids are actually growing faster off a larger base than electric vehicles, it seems. And so, that Ford is trimming its production of the F-150, increasing the output of more affordable hybrid by 20%. It's just this interesting. There was like this mode of thought. I think it was Toyota that was like, oh, we still think hybrids are going to be an important part of what we do. We want to, like, a lot of the world doesn't even have an electrical grid, guys. Like, maybe we should, do something that's in between. And they got attacked. They wanted to be listed as like non-ESG and like anti-environmental because they weren't going down the pure play battery path. To me, it just seemed crazy. It seemed like this kind of like the is it
puritanical?
Yeah, kind of that, like the purity argument that I think creeps into a lot of the discussions of like improving the world or ESG and stuff. It's like, if you're not purely a Tesla or like the best that we could hope for it to be, then you're bad. Where it's like, actually, we need these other steps because most of the world isn't there yet. You're I don't know.
I think it's so interesting, isn't it? So obviously, we're not alone here, but a lot of people spoke of the supply side response. Once you've had any sort of exposure and to commodity type products, it's almost guaranteed that is going to happen. But the demand side, that is, I agree, that is super surprising. I suspect that a lot of that will be driven by factors outside of EVs specifically, such as if the price of oil triples and sustainably stays there, that changes it. It's like, well, at first I did it because I wanted to sort of signal socially about how green and ESG friendly I am, and there's that kind of. And now it's like, no, it's just pure economic reality here. Is that this is just a no brainer. And before anyone asks me, yes, I know there's still an economic argument at certain prices, but you become those arguments can become stronger or weaker depending on what else is sort of happening in the world. So that is definitely very interesting. But the size of
it's just interesting to the mainstream as well. Like there's different needs for those early adopters versus the mainstream user. They want to be very comfortable. They can run it during a snowstorm or whatever. Those all these things become concerns for a mainstream user.
I just brought up a chart of lithium carbonate from trading economics. So you are looking at from November 2022 to today an 83% fall in the price of lithium carbonate.
Gotta love capitalism, eh? It's pretty cool.
Dollars, maybe it's in Chinese. Mm-hmm. But yeah, isn't that fascinating? I guess the question would be, is it now cheap enough? Following our discussion from Appen, are you going like, now I'm interested?
Yeah, so I'm open to that style of investing, which I'd call like capital cycles. So buying an industry, I'm not against buying it because it's not something that you want to hold for 10 years. If you can still make a really strong valuation case. I think this is like classic value investing, frankly. So you buy like a cash producing lithium miner, maybe like a low cost one. When it's at the bottom, you can kind of look at the cycle. I wouldn't say I'm not like jumping in, but I think you could make a case that we're getting close to it, right? Because what you want to see is a lot of production shut down. So all the high cost production, you want to see that shut down. You ideally want to see people go bankrupt that were high cost, and then you have the supply response on the other side. It normally takes a little while for that to work through, but this whole thing does seem to be pretty accelerated. There was just a story in the AFR this morning, I think, about how a loan to a lithium miner is being cancelled. So, like they were trying to borrow to expand capacity, and that's been cancelled because of the lithium price. So all that stuff adds to the supply response in the other direction, and kind of is what sets up the stage for the next further increase in prices later. So there's a way to invest in that cycle, I think, that I'd be open to. I'm not saying I'm there yet, but like that.
What do they say? The best cure for high prices is high prices.
100%.
Love that saying. It's so true.
That's literally the beauty of that's when capitalism works. I think setting prices do that. It's all very good.
Prices are a signaling mechanism. It's a global coordination mechanism. 100% agree.
Hopefully we don't get rid of that with any other stuff we're trying to do, because it seems like we're getting rid of prices in a lot of these domains. But that's a topic for another time.
have some thoughts, my friend, and we'll take that off air and we can talk about that in the long. Can I just? Sorry.
About real estate agents, probably.
No. Although, did you see the one with the white Ferrari? Did you see that?
I knew you had something. No,
that was so good. I got to say the X factor for me with lithium is that battery technology is evolving, and I don't think we've found lithium-based batteries are the best at this point in time. But that could change. I mean, I've even seen some stuff recently with people trying to bring back the Stirling engine. Have you ever heard of the Stirling engine? It's based on sort of heat differentials and stuff. Really cool.
I think I've got a mini Stirling engine that runs on top of a coffee cup.
Yeah.
And so, I got it to show the kids. It was mostly for me, man. The kids kind of seem to like it. I don't know what's going on.
I nearly bought one online the other day.
You put it on top of your coffee cup, and it uses the heat from the coffee cup to run this Stirling engine.
You put it on something really cold as well. It doesn't matter.
I didn't know that. Okay.
As long as there's a temperature differential, that's the only thing that kind of matters. So they've often called the external combustion engine. Doesn't matter what the power source is, as long as you can heat the outside of it, it'll work. It has a lot of inefficiencies, a lot of torque. Anyway, I don't want to go down that rabbit hole. My point being is that there are competing technologies, and I don't want to say, well, I don't invest in this space, so it doesn't keep me awake at all. but I don't think it would keep me awake even if I did. Other than I think it's something to be mindful of, that at some point out of a lab in a university somewhere, it's like, oh, we've got this really cool technology. We actually only need, I don't know, carbon or something, and it charges faster, it stores more energy, it's more environmentally friendly, it's, et cetera, et cetera, et cetera. That could change things very rapidly. Again, I don't know how to handicap it.
It's actually pretty close, man. So BYD are now the biggest electric car company in the world, bigger than Tesla, coming out of China. And they're building $1 billion sodium ion battery. And their plan is that their cheapest model, the Seagull, it was supposed to come out with sodium ion like now, but they've decided not to. But they're basically trying to create sodium ion as like a much cheaper, just running on salt, I guess, essentially, much cheaper than lithium. So yeah, it's happening already at a scale that, like, that sodium ion, I think, is the biggest challenge. But you're right, there's dozens of potential challenges that could happen.
Because it's such. I mean, the potential for return is massive.
That's a cure for high prices, right? It's the what is it called? Replacement. I'm forgetting the correct term for it in like Porter's 5 forces, but yeah, you can be replaced by a substitute, the threat of substitutes, right?
Substitution.
So if sodium ion can substitute lithium, then that high price you have in lithium, there's a cap. It doesn't matter about
lots of cheap sodium in the world.
Yeah.
100%. Lots and lots of cheap sodium. I got some in my cupboard.
All right. With that, you're bringing out the chemistry nerd stuff. What about thoughts for 2024? Any thoughts for the outlook for 2024? What are you thinking? What are you feeling about 2024?
Can I go very quick detour here? And I promise it's not about what you think it's going to be about. But the Bitcoin ETFs launched recently, and the price slumped afterwards. And I don't want to get into that, but it reminded me of what is called the maximum pain theory when it comes to markets. I think it's more specifically associated with options markets, but I think it holds true. And I think when this is why the best returns are made in markets, right? Because to generate those returns, you need to be a bit psychopathic that you can sort of withstand all of this kind of stuff. And markets have a way of it, not a Keynesian by any stretch, but I think he nailed it with his beauty contest kind of thing. They have a way of screwing with you, and the reason I use the ETF example there is that everyone had this narrative that this was going to be approved, and then when it got approved, it was going to see a bunch of institutional capital inflow. Fixed supply meets increased demand, prices go up. Now that's a pretty straightforward thesis, and if actually most of those things happened, it's only been a week or so, but most of those things happened. The price fell. Like, what? Why? But that doesn't make, it's like, it does, because everyone expected it to happen. And now people are profiting, have taken that. That was the trade, right? Everyone did the trade, and that's it. So my point being is that as I look out on 2024, you start to see things like increasingly dominant narratives of Fed pivots back to lower interest rates, bull market's back on, property market's back on. We avoided the hard. Everyone, when I say everyone, a little asterisk up the top, virtually everyone expected a recession last year. Didn't happen, right? Now everyone's expecting this. And I would say on that basis alone, I think it's probably not going to happen.
Yeah.
And so it was just another slap in the face for me to sort of say, you sometimes you sit here at your desk and you think, oh, I'm so smart. Look what I figured out. A plus B equals C. How could it be anything else? Forgetting that there's all these other people in this beauty contest looking at the same stuff, reaching the same conclusion, sharing the same hot takes on Twitter, and like we're all on the same page. And it feels like the way that the nature of markets are such that when that consensus or a reasonable consensus emerges, it is almost guaranteed to go the opposite way. So that's how I would answer your question.
100% agree. And I was thinking the same thing. And I think the important point for anyone listening is not just that Andrew's not saying like people tend to get stuff wrong or that economic forecasting is difficult. It's that the act of everyone agreeing, that act creates it being wrong. Yeah. So if everyone agreeing, if all of the marginal buyers or a very large majority share think I'm going to buy Bitcoin because it'll go up once it joins the ETF, they've already bought and priced in that thought, right? And so then once it happens, there's no one else there to buy it. There's no one to buy it. And it's the same with anything. So right now we've got it in the market, right? If everyone thinks this path, then they've already priced it in. They've already made their trades based on it. So it makes it like almost impossible to happen to a degree, right? Like you can have things where the magnitude can be bigger. So that was kind of my only thought with like everyone expecting a recession, like maybe it'll be worse than people thought or something, but it just didn't even happen.
But that was the debate. The debate was, is it soft or hard? Not is it avoided?
And so I think that's it's when you have the pricing element. It doesn't happen for everything, right? If it was like, if everyone expects the Wallabies to win this weekend, it doesn't really, maybe it puts some pressure on them or something, but it doesn't really change much. But it's that pricing element for it, because that would drive down the odds of the bet, basically, to the point where people can't make money from it. And it's even worse in financial markets because
Well, we could talk about with Appen again, right? Like that was the thing. Like this is worth $35 a share because and that was the dominant narrative, right? And there's just examples of this kind of stuff everywhere. So it's just, this is a really humbling game. And I think that is the real key here with all of this, whether it's an emu farm, a Picasso, a bottle of wine, or magic internet money. Like the point is be really super humble here, right? And if your thesis rests on something that everyone else is talking about, just be mindful of that, because it has a way of coming up and slapping you in the face.
Yeah, I like that, Andrew. So I guess you're basically saying, I think the majority is wrong. So you're not making any specific, but you're saying basically everyone's so certain about this that therefore there'll be something else. I think that's a good one.
Well, and this is what makes it so hard. Is I think if you study any of the great investors, or look at yourself and look at the great returns you've made, you've probably made that because you went against the flow. And that is, everyone says, oh, it's like everyone's a good driver. Everyone's an independent thinker. And like, I call BS on that, right? And I myself more than anyone else. Like, we're not, right?
Yeah.
And it's just, I think that humility more than anything is something that you have to have here, and just be aware that things are likely, or put it this way, you if you want the outsized returns, you have to be pretty comfortable with being the idiot on your own, outside away from everyone else, because if everyone acknowledges your genius, the gains won't be there.
Yep,
you need people to think that you're wrong.
Yeah, 100%. I always remind myself of that when everyone thinks I'm an idiot. But it's literally true. Like, if everyone's agreeing with you, like, yeah, that's exactly how it works. You're like, oh, shoot. Yeah. Like, that's not a good sign anymore. It's probably time to start selling.
Well, isn't it weird? Because I think all the good investors I know, I think they're all contrarian by nature. And kind of that has to be the case. To flip it around, the hard part about that, though, is that you become contrarian in everything.
You want to be independent by nature. If you have something to try and be, you want to be independent, not contrarian. Because you're contrarian.
Don't be contrarian for the sake of being. Everyone says the world is round, so no, I'm going with the flat earth.
You need to be willing to stand alone in a cold, like no warm huddle of the crowd. Yep. Like you need to have that characteristic. I think that's it. And some can be so far that they actually like shouting at the crowd that's over there. And I think you just want to be independent of them. You don't want to be like angry at them picking a fight or whatever. You just want to be doing whatever you think is the correct thing.
And just I want to hasten to add here again, that doesn't mean that you should take the opposite to the consensus. Sometimes
the consensus is right most of the time.
Most of the time.
Things. Yeah. Like if you actually look at most of the time about most things, it's mostly right. Like that's why it's hard. If it was always wrong about everything, it'd be very easy to beat. But yeah.
100%.
All right. So my 2024, I'd agree with that. I think that's a good take. I think Trump will absolutely dominate the news this year, as he tends to suck the oxygen out of the room anyway. I'm reading a book at the moment, which I'll probably summarize in a couple of episodes. I want to write something about it called Geopolitical Alpha, which I think is really good. And he talks about a theory of constraints, not preferences. So I really like that as an idea. It's kind of like the idea you shouldn't look at what Trump says he wants to do. You should look at what he has the ability to do. And so some of that, like he wanted to get rid of Obamacare in the US, for instance, but the constraint is that Americans basically never get rid of an entitlement or something once it happens, and he wasn't able to do it. So what matters not is what he says, but what the constraints.
Interesting.
And so going along with that, I think this is a year probably where geopolitics, Trump's politics, and it is geopolitics, basically the re-election of Trump, because there's a massive impact on the geopolitical order and alliances and stuff. But I do think this is a year, we've already seen it, right? So it's not really that surprising thing to say, but the Houthi rebels are shooting at container ships, and the US is trying to bomb their positions. It's a time where I think we've had this established order, and that order is not disappearing, but I guess you'd say receding into a multipolar world. Maybe we're already there. And so I think you see more of these little skirmishes happen more frequently. And so I guess we've had this for the last 70 years since World War II. You could, as an investor based in the US, completely tune out geopolitics. I think the right answer now is to still mostly tune it out, but I think you need to have, I think it'd be wise to have an idea about things so that because I think you're going to have a lot more stuff coming at you in this world, and B, some of them might actually matter. Whereas before, particularly if you're US based, it didn't matter because America just ruled over everything.
Yeah. Oh, I love that. Two very quick thoughts. One is just an interesting factoid. Bill Clinton, who was president 20 years ago, is younger than Biden and Trump.
Oh my God. Jesus.
Just let that stew for a second.
81. I mean, at least, yeah, anyway. Yeah, that's
isn't that crazy? Yeah, I just really? I had to Google and double check, ages and verify that. Was yeah, it's true. The other really interesting thing I saw was an analyst, a geopolitical analyst, the other day talking about naval blockades, and throughout the longest portion of history, to have a navy is the most expensive part of the military. Boats cost a lot of money to maintain and build and the rest of it. Mm-hmm. So the only countries or the only powers that had a navy were the very big boys, right? And to enact a naval blockade was one of the most expensive things you can do. Now you've got a ragtag bunch of rebels, terrorists, whatever you want to call them, who are able to do that with very, very minimal cost. Relative, they don't need a navy to do that. So the rules of the game have changed radically when a very small group who don't have the GDP of the US, China, or even Australia, right, are able to some degree of efficiency enact a naval blockade. Again, let that one sink in. And I guess the other interesting sort of downstream effect of that is that inflation, right? So
yeah, you have a lot of potential for inflation with all of this. The Trump news, maybe not inflation this year. Well, yeah, I think there's an analyst who makes a case that the Fed, just because they are part of the establishment, will inherently not want Trump to be president, and so therefore will want to keep rates low as possible. And I don't want to get into that, whether it's conspiracy, whatever Trump or whatever else. But I think you made that case. That is inflationary, right? For not maybe this year, but next year. And then you have all the supply chain stuff. I think there's definitely a potential for this inflation to rear its head again. The other point is services inflation is still actually quite high in the US. It's still hovering around 4 or 5%. Goods inflation has come way down because we've had this whipsaw of the pandemic come through the other side. But yeah, I do think that's a fair one, Andrew. The naval blockade, I read, getting long now, but read that book, The Taiwan Invasion Threat. And my clear conclusion from that is if and when China moves on Taiwan, it'll be a naval blockade. It's just such a no-brainer for them. Yeah. Much lower stakes. They could do it for years and weaken them. And who's going to intervene? Is it going to be a shooting war over a blockade? Blah, blah, blah.
Where are all the foundries? Where are all the foundries, right? And what's the most important sector? Well, one of them are arguably the most important sectors for the modern economy. It's fascinating.
So, I think there's ways to stay positive and think about it. But, that idea of that changing order, I think, will be we'll start seeing more of it this year.
Hey, you mentioned conspiracy theory before. I saw another great thing that I really like. Someone on Twitter said, I would characterize myself as a conspiracy atheist, in that I expect that many conspiracies exist and that I'm constantly being lied to. I just have no particular insight as to how. I just thought, yep, I'm going with that. I'm a conspiracy atheist.
All right, to close, this was Claude's idea. He's not here, but hey, we can try it. He wanted what's something that you're grateful for? So this attitude of gratitude, I guess, thinking about something that you're grateful for.
Do you know what? It's not going to be anything too insightful, but before we hit record, I was having a bit of a whinge to you about various things in my life, and they're all first world problems. And I think I do remind myself as often as I can that, touch wood, in good health, my family, we're not hungry. It's easy to shake your fist at the sky for all these things that drive you mad and could be better and the rest of it. But I'm not suffering from some horrible illness or anything like that. And I think of all of the hierarchy of needs, like health is way up there. So I'm very grateful.
Yeah, that's an awesome answer, man. I'd say this gratitude thing has actually been a really big thing. I haven't talked about it much, but it's been a big thing in my life. I started doing gratitude journaling like a few years ago.
Oh, yeah.
I found it really helpful, like literally writing down every day 3 things you're grateful for.
You can come up with 3 things daily? I got 1 for the entire year.
There's everything, man. Well, that's actually the honest answer is it starts off. It refocuses your brain basically on seeing the problems. Our brain's designed to see problems because that's what helps us survive, right? Like we see all the problems around us. Why don't I have a Ferrari or whatever? But when you refocus, you can also use that focus for gratitude. And once you do, you just see it everywhere. Like I'm really grateful I have 2 legs because I can walk around. But when I did the exercise, my common recurring thing would be family. So I just feel like that once you start thinking about it, it emphasizes what's important in your life. I think it's a good exercise. We'll see. Hopefully Claude can be here next week and give us some. So I think it's a good hope everyone out there as well. And you have some things to be grateful for. And look forward to great to be back in the saddle and look forward to chatting again next week. You can hit us up on Twitter @BabyGiantsPod. And until next time, thanks for listening.
Yeah, cheers.